Mara, formerly known as Marathon Holdings, is the largest public Bitcoin miner by hash rate under management at 60.4 exahashes, but it has been lagging its peers this year as Bitcoin mining stocks experience a historic rally amid the wider AI and HPC boom. This is the Mining Pod brought to you by CleanSpark, and for today's show, we will be giving a breakdown of where Mara stands currently, what its AI and HPC aspirations are, if any. They've been kind of vague here, though they do have partnerships in the works, and what we should expect for them over the next year, and what investors would like to see Marathon catch up to the pack. You're listening to the Mining Pod, and we'll be right back after a quick word from our sponsors. Guys, there is a serious problem right now in Bitcoin mining, and we need to talk about it. You need to pay attention to this. Bitcoin miners are identifying as AI companies, and people keep missectoring them because they say, well look, your infrastructure is clearly for Bitcoin mining. What do you want me to do about it? I'm going to tell you what you need to do. You need to call FBox, the leading digital infrastructure company with all-encompassing cooling solutions. FBox designs industry-leading air, hydro, and immersion cooling systems for Bitcoin mining and AI and HPC data centers. I want to highlight that. If you're a Bitcoin miner who needs to bridge the gap, if you're pivoting or doing hybrid operations, they can build cooling solutions and infrastructure for both your Bitcoin mining and your AI and HPC operations. And they have an in-house API that lets you monitor it from the web or on mobile. So go to www.fbox.tech/contact to learn how FBox can help you optimize your digital infrastructure today.
Mara has been like the name in Bitcoin mining for so long, yet what we've seen over the last 6 months is that their market cap has been flipped by not only IREN, but also Riot. And it looks like there could be other ones waiting in the wings, right? A lot of these other Bitcoin miners are not only mining Bitcoin at a more efficient pace and also starting to scale larger than Mara. Mara's still number one, still has about 60 exahash in operational deployments. Realized is lower than that, but they're still number one in terms of hash rate. But there's a lot of miners coming for them. And this podcast, the purpose of it is just start asking some questions and then also give some investor feedback for the space on this. So I think the first thing to start with is a snapshot of where Mara is right now. And then in terms of like where we're going to go for the podcast, for those listening, we're going to talk about some recent news items from Mara that kind of have us concerned or maybe not concerned even. Some of these things are bullish. And then we're going to finish with some lingering questions about their strategy as a Bitcoin mining company. So I'll let you kick it off first. I know we have a lot of data from their recent investor presentation, but we'll kind of go through some things like the number of sites they have, monthly production, year to date, things like that.
Yeah, so just like a quick high-level snapshot from their Q2 earnings. They currently have, this is a snapshot from their website in terms of current operating capacity. They have 18 mines online, 1.174 gigawatts, 18.6 joules per terahash efficiency for 60.4 exahashes of total installed capacity. Now, as we'll get into later, obviously, sometimes that's more or less utilized, but they currently have I believe the largest fleet of any Bitcoin miner. They were one of the first, if not the first, to pass 50 exahashes. 96% of their footprint is currently in the US. So 96% of all the megawatts that Marathon, has a legal claim to exist in the US. The other 4% are international, split between Paraguay, Finland, and UAE. Now, this is important because Marathon has made a big deal out of the fact that they want this portfolio to be 50-50 going forward. They want to continue with international expansion. They want to look into partnering with sovereigns as they have done in the UAE. And they want to make sure that they're not over allocated towards the US. And the reason I highlight this is because right now it's a big uphill battle for them. 96% of all of their operations are in the US. So they're going to have to really put some effort in to expand that portfolio outside of it. Of the current hash rate that Marathon has online, it's basically split 50-50 between sites that they own and sites that they host at. So currently, Marathon has a 599 megawatts of wholly owned capacity with 1.237 gigawatts of total potential capacity. So a lot of room to grow there versus 501 megawatts of hosted capacity. And there's no room for growth there that Marathon is listed because they're not focused on, expanding their hosted hash rate. They want to focus on self-owned. For those of you who have been following Mara for a while, Mara made its kind of name in Bitcoin mining with this asset light model. It allowed them to deploy extremely quickly. In the last cycle, this was huge when posting hash rate orders and installed hash rate was kind of the name of the game in terms of getting your stock price to move. But Marathon would assign hosting agreements and basically just move fast and break things and deploy miners as quickly as possible. They were not interested in owning the actual sites themselves. That changed recently. More or less over the last year or two, they started really moving towards owning their own sites. The reason for that is obvious. With the halving came a 50% block reward reduction. Now hash price is even more compressed. Margins are continuing to be compressed as Bitcoin takes a hit. So you want to be owning this infrastructure, and Marathon has made huge moves to do that. They made a number of acquisitions over the last few years, but they still only own about 50% of their installed capacity, which is, it's a lot better than not owning any of it. But I think that if you're a Marathon investor, you would want to see more than that right now, especially considering all of these infrastructure assets are, considered, at least they're outside of population centers, are considered to be, prime real estate for AI HPC pivots, which we'll touch on later too. So all that being said, just like to recap that, Mara is still top dog in terms of hash rate. But I think, investors are asking themselves, why don't you own all of it yet? And that's part of the reason, is along with the AI and HPC pivots, that they've kind of lagged behind in the current Bitcoin mining stock rally. That's kind of it. There are a few other things, like this wind center that they own, this wind farm that they own generates 139 megawatts. I did some back of the napkin math. That's like on a good year, maybe $13 to $17 million in annual revenue for Mara.
Assuming Bitcoin mining with that.
Yeah. Well, no, that's just assuming you're selling it back to the grid. I mean, if you're doing Bitcoin mining, who knows? I didn't run those numbers, but it can't be too terribly much more, right? I guess just my point in saying that is, like, they kind of build this as, we have optionality to sell into the grid or use low power to mine Bitcoin. And they paid, I think, $200 million for this wind farm. And I just wonder, it's like, does the dollar and cents there actually add up? Because we've heard some rumblings that it may or may not have been the best decision for them. So that's top of the line snapshot.
I'll jump in with some thoughts. So going back to the 50-50 thing, I think that's notable, right? Because that's actually a contrarian bet in a few ways. A lot of the megawatts we've been seeing move to the United States, and a lot of the megawatts are moving to the United States because that's where OpenAI, Oracle, etc., are wanting to place infrastructure, right? And so we saw Bitfarms really do that. They moved into the Panther Creek location. They allocated a lot of capital towards those megawatts, and then they sold all their stuff in Paraguay. And that was completely about the valuation of a megawatt in a developing country or in the global south or just outside the United States versus in the US, where it's going to have access to some of these larger AI companies, right? So there's one thing there. The fact that Mara is wanting to move into these other countries, it's not a consensus bet. The only point that maybe makes that like a little bit better, and sometimes it's okay to be contrarian, right? So I'm not saying it's not necessarily wrong, but the thing that might kind of work for them is they're leaning to this sovereign cloud idea, where every country is going to want its own cloud system. It's going to want its own inference system, its own compute system. And so they've set up subsidiaries in both France and I believe in the UAE, but at least in the Middle East, to set up sovereign clouds. Hive has been doing the same thing, right? They set up shop in, believe, Toronto, and they've been building out the sovereign cloud idea that every country is going to want its own GPU cluster, and kind of leaning into that software idea or whatever it was for Bitcoin mining a while ago, but actually just for GPUs, right? So it's kind of funny how that changed. So there is one thought there. They're 96% in the United States, non-consensus bet, going to go 50-50 into the future and participate on the AI side in a different way. Now, what does that mean for the Bitcoin mining allocations, right? If you're going to go 50-50 and you're going to lean into sovereign cloud idea, doesn't really seem like you're going to lean into Bitcoin mining. Certainly not going to lean into Bitcoin mining in France. They obviously have Bitcoin mining in the Middle East, and they've had a few partnerships out there and are actively running those sites. But it would seem that anything from that position would be a new enterprise, or at least a partnership, which we can get into later with their partnership with a large French conglomerate that they purchased a stake in one of their subsidiaries in order to get into the AI HPC scene. So those are two things on that note. Okay, so looking at the Miner Mags dashboard, and we're looking at Marathon's realized hash rate. Marathon, or Mara, I should say, Mara gave a 75 exahash end of year terminal goal is my understanding for 2025. And, they've been reaching that or been running towards that. And that's operational capacity, right? That's not realized hash rate. And the difference there for people who don't know is operational is basically like you have an ASIC on the rack. That doesn't mean it's actually like whirling and twirling and like pushing out Bitcoin. It just means that you have that capacity on the rack. Now we look at the realized hash rate here. You see that it's actually about 75% the operational hash rate. And some months it's a little bit higher. They've had, periods where it's a little bit higher. And I think that comes back to the fact that they're running their own pool. And so you're going to have months where you're a little bit more lucky and things are kind of shifting your own way. So in May, they had 99% realized hash rate, but they also had a record month in terms of block rewards received by Mara pool because they were really lucky that month. But typically what we've seen over the year is, they're in the high 70s, low 80s in terms of realized hash rate, which means that their overall fleet efficiency is really low. And I think this can be a composite of a few things, right? It can be one, that their sites are not necessarily being used entirely for Bitcoin mining. It can be that they're also installing hash rate, which can take a while. And then the last part is that they can be at some of these hosted sites. And some of these hosted sites, they're not always as good as keeping the hash rate up because the contracts aren't always established that way. So in the hosting world, I think a lot of plebs who have hosted Bitcoin mining will, feel this deeply. You don't always get the best service you want. And so that's part of the reason that a lot of these companies have been moving more towards the owned hash rate completely.
This is a really important thing to note too. If you don't own the megawatts, you can't control your uptime. And this goes back to some numbers that I was crunching right before we hopped on. Just did a comparison between Mara and CleanSpark, and just because it was the most apples to apples, because CleanSpark and Mara are like really the last totally pure play miners. No, CleanSpark's going into AI. Riot's doing the same thing. They're trying to do it with Corsicana, but they're the closest peer competitors, I think. And so if you look at the direct operating cost per exahash for Q2 for Mara and CleanSpark, Mara came in at 2,300,000 per exahash. CleanSpark came in at 1,800,000 per exahash. So that's a pretty significant delta. And it just goes back to what we've been talking about in terms of you can have these uptime these problems, especially if you're in these hosted facilities and you don't have control over the megawatts.
Yeah. And so a few more thoughts. It's the mining capacity there, right? So against their peers, I should probably throw that up in a second, but they're still number one. And then they have a few other competitors coming up. CleanSpark, Kingo, kind of running with them this year. But IREN has broken over the 50 exahash mark. They're going to pause there. And then Riot's around 33 exahash. So those are kind of the main competitors. And looking at Bitcoin production and holdings here on the Miner Mag, we see that they're about 53,000 Bitcoin as of September. So it's a significant war chest. So as much as we can make a bearish podcast on Mara, perhaps, you still have so much optionality in the fact that you have a huge amount of Bitcoin on the balance sheet. And it only takes Bitcoin ripping a little bit for you to be in a completely different position. So I think a lot of that Bitcoin on the balance sheet perhaps has been something that's put them in a position where they can be more conservative than some of their peers, right? A lot of the other guys are having to make more risky bets, and those bets are paying off or they're not. Mara has so much Bitcoin on their balance sheet that I think that it's tended towards being like a less risky play. And that's why we see all these partnership announcements and other things. That's some sideline analysis. That's not necessarily anything that you'll see a consensus take on the street. It's more a armchair analysis over here, but that's my take on it. I don't have much more on that side. Can you take us over to some of the revenue figures?
I just wanted to double tap on that really quickly. That's the Bitcoin holdings is like their strongest, probably. I would definitely say their strongest feature. They have the largest Bitcoin holding of any public miner. They have the ability to loan this out or liquidate it if they need to. And this is also really interesting when you consider JP Morgan is now opening up Bitcoin and Ethereum collateral for loans. This changes the game in terms of allowing institutional players to access capital with their cryptocurrency at I would assume, much lower rates than what they're used to. So in terms of where Mara is for their access to financing in the future, obviously they can tap convertible notes as they've done in the past, but their Bitcoin with institutional adoption of some of these Bitcoin and crypto credit instruments, I think it gets more interesting for them down the road. But
yeah, and they have that 2 in Prime investment, and then also they have a lot of their coins over there. So they're they're earning yield on top of those coins, which is a significant benefit versus some of their peers out there who have sold their coins or who have smaller war chests.
We are CleanSpark, America's Bitcoin miner, a publicly traded company with the largest operating hash rate, powered entirely by self-operated infrastructure across 4 states. This is our proof of work. We are setting the standard for what's next. Learn more about the intersection of energy and Bitcoin at cleanspark.com.
Yeah, so looking at their Q2 2025 financial performance, they brought in $238.5 million in Q2, up from $213.9 million in Q1, and up from $214.4 million in Q4. Going back to the unrestricted cash and Bitcoin holdings, they've got $5.442.8 billion on their balance sheet at the end of Q2. So again, in terms of being able to deploy for expansion, they shouldn't have a problem with that. Adjusted EBITDA came in for the quarter at $1.245 billion and net income of $808.2 million. So, I mean, on paper, they had obviously a great quarter like most of the other Bitcoin miners. They continue expanding. I think the question for Mara becomes, and this is maybe a good chance to bring in some of Penny's analysis, is like, what's the upside case when the entire industry is looking towards this golden rabbit in AI and HPC that's promising higher valuations, better access to financing, greater income potential? What do you see for that with Mara, right? In terms of like, if they can't break into this, what is really the upside case for them? Because it would take, as Penny points out, a lot for Bitcoin in terms of it increasing for a valuation of Mara, 2-5x from here to really make sense. And I think that's why Mara really has lost itself, I think, in the current rally, is the current investor in Bitcoin mining stocks is like clearly looking at these things in terms of AI growth stocks, and they're no longer viewing them as Bitcoin miners. So all of the investment meta or the company meta in terms of trying to get your stock price to move from the last cycle does not work anymore. And so my question is, as they saw all these companies going for AI and HPC, and they saw the benefits of that in terms of what it meant for investor appeal, and they also started seeing some of those be successful, why did they not decide to be more aggressive on this early on? Was it because they legitimately thought it was not worthwhile and they thought it was a pipe dream? Because a lot of people were making those arguments, and that's somewhat fair, but like all your peers seem to have not thought that. So what does that say about your decisions in leadership? Or two, was it because their sites just simply were not attractive enough for some of these hyperscaler tenants or AI and HPC companies? That's a question I would ask myself if I were a Mara investor, even with the stuff that they try to do with AI and HPC, which we can touch on here shortly.
Yeah, let's go through some recent news items as well, just so we can contextualize that, and then go into some open questions I think that are worthwhile discussing. So the first one would be that Mara's market cap was flipped by IREN. Not sure what point that was this summer, but IREN obviously has almost become a meme stock in terms of just like the upwards volatility, right? It's over $60 a share. Beginning of summer, it was at $30 a share. And at April lows during Liberation Day, which, cherry picking, everyone was at the very lows there, but it was, sub $5 or so. And so it's had a crazy multiple in growth. And so maybe you could be like, IREN's like going a different path, becoming a neo cloud. We don't need to compare ourselves against them. But then you look at Riot, which also flipped Mara this summer. And, Riot and Mara have been like the two names for investors in Bitcoin mining forever. These are the OGs. They were already publicly listed before they became Bitcoin mining companies. Mara was in the patent business. Riot was in the pharmaceuticals, biotech industry beforehand. They were both sort of just like these holding companies, and then they both started to mine Bitcoin. The fact that Riot flipped Mara and then also has, large access to power in Texas, including a 1 gigawatt site at Corsicana, is notable, right? And so that kind of puts you in a position as a Mara investor that you have all these assets spread out all over the place against these other guys who have large allocations of energy in one location. And right now the market is picking one over the other very clearly. So that's one point The next point is some original reporting we did here over Blockspace that the CTO was quietly let go. It's kind of phased him off of the website. From our understanding, he was in charge of the 2PIC project, which was, Mara's attempt at building some technology within the AI space. They've been very vocal about building out technology for Bitcoin mining and then also growing to AI HPC. 2PIC especially was launched in spring of 2024, so we're coming up on 2 years of not really having that much information on it. It was launched in order to cater to both immersion Bitcoin miners and then AI. Didn't really work out. We have a 30 megawatt project that was a pilot project that was talked about in some investor filings. Rumors in the space, nothing that is necessarily validated fully, is that pilot project did not go very well, and that's why we haven't had an update. And then with the CTO quietly being let go, that does not necessarily instill confidence that that project has gone well. So that kind of leaves you with a few other ideas, like where are they going to turn for AI HPC? And a lot of the other Bitcoin mining peers, to be frank, they also are laggards here versus a few of the others. Their plan is basically go hire talent, go hire someone from AWS, go hire someone from Google, and then flip your sites into whatever makes the most sense. Sell your sites if that's what you have to do. That's what Bitfarms did, right? They sold all their megawatts in Paraguay, and then they purchased all these megawatts in Pennsylvania, and then they hired someone from AWS recently to build out their portfolio. Mara still has that opportunity, especially with all the cash on the balance sheet. What they've sort of done is this purchase of a subsidiary. I can never say correctly. It's like Exaion or something like that. But this, they've purchased 60% share in a subsidiary of an AI HPC company. The only knock I'd give on that is we have no disclosures around what this actually meaningfully means for Mara investors. There's no understanding if Mara will be able to pull any cash flow from this, or for now, it's just an attempt to get a press release out. So it would be great to get more understanding around what this actually means for Mara investors, because as of now, we just know that they have this on their balance sheet. They have this cash investment into the subsidiary. In terms of like the talks that Fred has given, or Fred Thiel, the CEO of Mara, has given, this seems to be like their attempt of breaking to the French AI space and becoming a sovereign cloud over there. So potentially long-term bullish, but if you're looking at sort of the others out there that are putting out information almost on a weekly basis and really pushing their narrative forward, you're seeing a clear communication difference between the two. So those are some of the recent news items that are certainly not in Mara's favor. And I think they leave us with some like lingering questions, which you just brought one up, Colin, which I think is, worth addressing. The other ones I'll throw at is, what does Mara do if Bitcoin moons? But what does Mara do if Bitcoin just kind of sits where it has been trading, kind of chopping for a while? How are they going to use this Bitcoin for something other than earning slight yield on it? Are they going to put that cash to work to go purchase another AI company that's out there, to go purchase a large site? Is it even possible to go, procure some of these megawatts that are out there, because they're going to be competing against the CoreWeaves of the world?
Outside of the fundraising piece, I want to highlight or just zoom in on the Exaion thing. That's what I'm calling it. If someone wants to correct me, please let me know. But this is the AI HPC subsidiary of the EDF, which is France's national power authority. And per what Will was saying, Mara has entered into an agreement. It is not finalized yet to purchase up to 75%. Right now, I think it's 64% of the initial agreement with an option to purchase 11% more of the company for a total contingency of 75% ownership. And to what Will was saying is it's really not totally clear what Mara wants to do with this. They were on record, or at least Fred was on record, I believe, at the end for their 2024 year-end financials, or maybe it was Q1, basically saying that they weren't going to approach AI and HPC the way the other miners were doing it. They would try to offer load balancing services with Bitcoin mining, something that a lot of miners have talked about. It makes sense. It fits perfectly with AI and HPC, having something to soak up excess electrons when you don't need them. But he said that that's where it would kind of stop. But this partnership seems to indicate that they are more serious about wading further into that sector and actually having a business line stood up for it. What that will entail and what exactly that means, I don't know, especially considering, Mara is buying a majority stake, but they're not outright, buying an AI or HPC company, right, to subsume into their primary business. The other questions I have for this is like, what's the TAM here compared to the US? Because I just did a little like quick research. In 2024, there were 5,000 data centers in the US. In Europe, that was 1,200 in 2024. So you nearly have, for every one data center in Europe, nearly you have 5 in the US. And all of your peers are looking at the US for expansion. And like you said, Will, Mara's making this contrarian bet, saying there are dollars elsewhere as well. Are there as many floating around in the US to catch as there are in Europe, right? Or rather, are there as many dollars floating around in Europe to catch as there are in the US for something like this? Does that even matter if you're partnering with sovereigns and you kind of already have your moat built in because you're partnering with, you know, the AI and HPC company for the national grid for France? So maybe it doesn't even matter what the TAM is if you already have, you know, a state-controlled moat built for you for that business. But yeah, I think that's the biggest outstanding question. Why focus on Europe and elsewhere when everyone else is focusing on the US, and will that pay off? And I really want to know, what is the point of this Exaion stake? What does this actually do in terms of helping them advance that business line? Because they also said that they wanted Exaion to look at developing business outside of Europe for its AI and HPC business, which is kind of funny because it flies in the face of, you know, Mara saying they want to do 50-50 between the US and international. I mean, that doesn't mean that going outside of Europe means going to the US necessarily, but there's just all of these seemingly like conflicting narratives with these deals. So
really quick, I'm going to go back to the dilution numbers because I didn't have them in front of me, but looking at finance charts to see that it's been about 40% dilution in terms of share count for investors from the beginning of the year. That's pretty brutal. So December 31st, 2024, they had about 400 million shares outstanding. As of June 30th, they had 440 million shares outstanding. And so this is actually lagging, obviously, right? Because we don't have Q3 financials. So we'll see how many shares they've sold going into quarterly earnings, which are coming up soon. And then looking over since June 30th, 2024, they were at just under 300 million shares. So they have diluted quite a bit in order to get to the place they're at right now. When will this stop for investors? And you're looking at some of the alternatives out there that, yes, aren't necessarily doing dilution, but they're also seeing higher growth in their market caps as well. The last things I'll throw in here, there is a convertible notes into this, and like the fully diluted structure of these things does like make this a little bit more complicated. But I think for like retail investors who are interested in looking at peers, dilution is pretty simple. Are you going to put money into a stock or a management company? It's going to continue to dilute, or are you going to put it into one that doesn't use dilution quite as often? And I think like this chart does not instill a lot of confidence. One more thing I just want to pick up on, and I think it kind of goes into what you're talking about there, Colin, is looking at competitors. What does it mean for Mara to compete in the AI HPC space? We've seen a lot of the competitors so far really be leaning into CoreWeave's deal structure. Applied Digital, which used to have a relationship with Mara. Core Scientific, we'll find out about the results on that CoreWeave deal soon here. Galaxy Digital have a deal with CoreWeave, which has, you know, really boosted their stock price and kind of pushed them from just being a crypto finance company into actually being in one of the AI infra companies out there, and really having two different valuations for the business model, which has been very interesting. Bitfarms building out there, so they don't have a tenant right now, but it doesn't seem like they're necessarily needing one until the spring. And then IREN, of course, which is, you know, going full neocloud, buying GPUs and getting valued based on the future revenue of those GPUs. Mara's right now sort of stuck in this no man land where they do have the subsidiary and they have their Bitcoin mining, but we don't really know much more about that. And the response that we've seen mostly in the conversations at the sell side events has been that Mara is leaning into building out its vertically integrated mining ecosystem. And we already mentioned the two picks, so I won't go through that again. But I just have questions around the rest of the infrastructure. And does it really matter to have the best technology in Bitcoin mining when most of this stuff is open source? And the marginal benefit of it is quickly lost when you have a large company that is spending money on various things, right? Like if your SG&A, which I don't have in front of me, but my understanding is that SG&A is almost one of the highest. What's the value of vertically integrating your company and saving on the margin if you continue to spend. I think Marpool is a cool idea. I think that it's cool they leaned into that. I think Enduro is a cool idea. I have a few friends who work on the team, and I think like long term, it's really important that they're building on those sort of things. I'm pretty flaky on the Auradine project because I haven't seen any purchase orders for that, but perhaps long term that becomes extremely valuable to them, just like the relationship between Bitmain and Kango is valuable, and the relationship between Bitdeer and its seal miner is valuable. But for right now, we don't see that really fleshing out. What we do see fleshing out, however, is the value of a megawatt for Bitcoin mining is a lot less than the value of a megawatt for AI HPC. And the market knows that, and Mara is being punished for that. So what will happen certainly what's going to happen with the Q3, what numbers are we going to see, and then what's going to happen over the next 6 months as the market cap continues to bleed against alternatives.
Yeah, just one note before we close on Auradine. The benefit for Mara here is that they get input into the R&D process, and they can basically see a rig from ideation to production to electrification. So I think that in terms of like how much Auradine is selling to other miners, to me isn't as interesting to me as like how much does that lower Mara's cost to produce hash rate, and did they actually get to help design these machines in a way that suits their needs. And I think that ultimately, whether or not this their investment in Auradine is fruitful is kind of like, we'll know that over the next few years. How sturdy are these machines? How reliable are they? Can they go toe to toe with Bitmain and MicroBT? But everything else, to what you were saying, to your point, Will, if all of these things are so great about building a full stack Bitcoin mining company, you should see it accruing in the stock price. You should see those incremental improvements to the bottom line. And you just don't see it. And to your point about SG&A, they had 92 million, 93 million for Q2. It is on the high side. It's not maybe as high as we might expect, considering how big Mara is. But maybe this is a kind of a good thing to close on. You were showing the dilution chart. And the fact of the matter is, most of the major miners have diluted on par with Mara this year. But that doesn't matter to shareholders when you look at the stock returns. Yeah. Because Mara is this blue line down here for those of you who are following on video. And this is the year-over-year returns. They're at 5.4. The lowest one out of the 5 cohort that I have here, this is IREN, Mara, CleanSpark, Riot, and Hut 8. The lowest one is CleanSpark above them at 62%, which is still a great return, right? So like, all that being said, you're looking at the top Bitcoin miners, the lowest return of the top cohort is 62%, and yours is 3.4% or 4% if you're, 4% if you're a 5.6% if you're a Mara investor. Anyway, they're just not seeing it reflected in the stock price. And I think you're kind of right that at the end of the day, this kind of just boils down to there are megawatts for Bitcoin mining right now, and there are megawatts for AI. And the latter is much more valuable, and investors want to see what your game plan is for that.
A lot of these Bitcoin miners have recently pivoted, and the market is very quick to forget. If you are willing to stake a claim in what's happening with AI right now, you are going to be rewarded for it. And if you buy into the narrative, which I think a lot of people do right now for good reason, that megawatts are only going to become more important going forward and only going to be more scarce over the next few years, as there's a constraint on generation, as there's a constraint on getting things as simple as a switchboard or getting things as simple as a transformer, then you have a lot here. You have a lot of Bitcoin on the balance sheet. You have your place in a lot of these index funds. You have your place in terms of branding, and you have all these megawatts. So why not lean into that? To me, it's a little odd, but that might be coming. And we've seen a few of these companies this year that were more on the pure play side flip. CleanSpark certainly flipped this summer after their former CEO exited stage left. And I think their stock price has been rewarded by moving out of pure play and moving into the AI HPC scene. It's certainly been rallying ever since the July. I think it was around $9, and now it's like around $20. So we could see something very similar. That's the beauty of owning your own infrastructure and owning your own megawatts. Like, the market can reward this very quickly. We just need to see, I think, more transparency in terms of the assets under management and what they're actually doing. And then we need to see some announcements, I think, besides just vague partnerships, which aren't very clear at the moment. That would be my 2 cents from the sideline. And I think the sentiment I pick up in investor circles is certainly around that as well. Those are my final thoughts. We can close out there probably, Colin.
Thank you all very much for tuning in. If you are interested in the rumblings on Twitter about a potential soft fork for filtering JPEGs and the like on Bitcoin, tune into Bitcoin Season 2 on Wednesday. We're going to have a great interview with Rob Hamilton on that. And also, if you're listening to this today, check out our newsletter. We also cover it there. Go to newsletter.blockspace.media, and we will catch y'all later.